if you're a stablecoin wallet provider today and a consumer, pays directly in a stablecoin at a merchant, funds are actually leaving your platform. And today you don't make any money on that. Like that is actually net negative. Like you actually wouldn't want someone, to spend at a merchant.
This is Money Code. It's a show where we decode stablecoins and programmable money so that you can better prepare for an on-chain future. I'm Chuk, Okpalugo, your host and author of Stablecoin Blueprint, and I'm here with my co-host Raj Parekh, head of stablecoins and payments at Monad. How are you doing today, Raj?
Doing amazing. We have an awesome guest today and a dear friend, so I'm excited to jump in.
Yes, it's a bit of an extra special one today because we're joined by Cuy Sheffield, VP and head of crypto at Visa, who's been one of the longest running and most vocal advocates for stablecoins and tokenization, and Raj's former boss. So really appreciate you joining us today, Raj. Cuy, how are you?
It's great to be here. I'm a huge fan of the show. You guys are killing it. You got amazing guests, great content from operators in the space. So just honored to be here.
I appreciate that. So before we dive in, just a quick note. Money Code is brought to you by Stablecoin Media and powered by BVNK. The views and opinions of the hosts and guests are their own and may not represent their companies, and nothing we discuss today constitutes investment advice or any other form of advice. Oh, so Raj, given the background here, do you want to take it away?
Yeah, sure. I mean, first off, Cuy and I go way back. Cuy is obviously a close friend, a mentor, my former boss, like you called out, Chuk. I want to maybe start with a quick story because there's, I think fast forward now, it's been like, 6 years and we've been really deep into the stablecoin, programmable money future. But the early days of Visa crypto is probably one of my favorite moments in my career so far. And I actually have a lot, I think a lot of it was because of Cuy. Cuy was definitely I would say, patient zero at Visa, kind of speaking the gospel of blockchains, of crypto, of stablecoins. He pulled me in, and I was a product manager at Visa. I was working on other parts of the organization. I was definitely very curious about crypto and stablecoins, but it was really Cuy who I think even we were just joking before the show, but I still remember a stablecoin 101 workshop where Cuy was breaking down Tether USDC. And this has got to be like 5-6 years ago now at this point, where we used to bring the Visa organization to come to these sessions where we would just explain these basic concepts. And just like having a front row seat to you, Cuy, has been awesome, just being a real voice for the industry, but also kind of pushing Visa forward as well. So I'm particularly really excited to have you on it. And maybe we can spend some time talking about just, you've spent a lot of time thinking about the intersections of blockchains, but also just going back to D-Hawk's vision as well. So there's a lot to unpack here, and I'm just super excited to have you here as well.
Yeah, I appreciate that. So where do we start? I mean, I like to think myself as, I was the crazy crypto guy at Visa, one of the crazy crypto guys at Visa. And I still am, the crazy crypto guy at Visa. I came to Visa through the acquisition of TrialPay, was really grateful, first job out of college to get to work for Alex Rampell and Terry Angelos, and just brilliant, entrepreneurs. But I knew nothing about payments and I knew nothing about crypto. I woke up one day and they're like, we're selling TrialPay to Visa. And, I was in the, doing ad tech sales and, going to Affiliate Summit West. And I was kind of in the advertising ecosystem. And, I came into Visa and I had this really interesting experience where, I was learning about Visa during the day and going down the rabbit hole and just trying to understand Visa as a company and Visa's history. I stumbled upon, D-Hawk. I read his book, One for Many. And I was just fascinated that it's one of the most interesting corporate histories of any company out there. And then I was learning about payments. And then at night, I was living in San Francisco at the time, and it just sort of happened. Started to go down the crypto rabbit hole and had friends that were spending time trading altcoins, and so I started going to some crypto meetups. And so when you have this experience, this is like 2017, 2018, when you're like learning payments by the day and learning crypto at night, there were just these things that were like immediately apparent. And one, when I would ask people, at Visa and people who knew payments about crypto, it was just weird and crazy, and they didn't really know anything, and they kind of dismissed it, and it was a natural thing to do. And then I would go to a crypto meetup and ask people who knew everything about crypto about payments, and they'd be like, "Oh, everyone's going to pay for things with Bitcoin, and like what's the point of a card?" And so it seems so clear, like the intersection was going to matter in between the two. And I was like, I'm never going to be the world expert on everything payments, but I can know more about crypto and people who know a lot about payments. I'm never going to be the world expert on crypto, but I can know more about payments than people in crypto. And so I just found a way to like, I want to be at this intersection. I said, I want to spend the next decade of my career figuring out how these two worlds come together. And it seemed like Visa was the best place to do it. And it really started with recruiting other evangelists like Raj, which I don't even remember when we met, maybe 2018 or something. But it was very clear there were people who you talk to about crypto and they'd like listen to you and say, okay, and then they'd like go away and like you never hear from them again. And then there were people who like keep coming back and like want to talk about it more. And then before you knew it, it's like, okay, how do we start working on this together? And so no one really gave us permission and like asked us. We just kind of said, this is going to be important. Let's start working on it. And I think that's what it takes sometimes inside large companies is, you have to just take it upon yourself to say, this is important. And, I think that there's a critical role for Visa to play. I think we've got a really unique DNA and heritage in kind of early story with D-Hawk that applies today. So it's been a ton of fun, I think, throughout different cycles, from bear markets to bull markets. But, being able to work with folks like Raj. And I'd say one of the things I'm most proud of is the Visa crypto mafia. And I think Raj in many ways was like, the patient zero of that mafia. And I think now we've got, at least 5 people who've worked, related to Visa crypto have now started companies, raised venture funding. We now have 2 exits. And I hope that there are many more. And like being able to build a culture where talented people come in, they learn payments, they learn crypto, and then they go on to starting their own companies, becoming executives in the space. I think that's great for Visa. I think that's great for the industry. And now you actually have people who understand payments working in stablecoins, where before used to be everyone working in stablecoins and crypto had no experience in payments. So that was a big problem.
Yeah, absolutely. I think you nailed it. There's this intersection between payments and crypto that I think is underappreciated. There's so many elements of one and that is not necessarily applied to the other, and it goes so deep. I guess just for some of the audience who aren't aware of that intersection, what are the key kind of things that are important and obvious in payments that most crypto people miss? I think, yes, we can say compliance, but can we go into a bit more detail about what those things are?
Yeah, things that are obvious in payments. I think starting from like the Visa lens, merchant acceptance and like ubiquity is such an important thing. And it's not a technology piece, it's a network piece. And so for many years, I've had people in crypto talk about okay, like here's a new blockchain and it does as many transactions as Visa or more transactions than Visa, and I think people in crypto tend to approach it from like a technology angle and say, okay, if we can only have a faster technology than Visa, we're going to beat Visa. And they don't have an appreciation for this like ecosystem that you have to build and the network effect of how do you get 150 million merchants across the world to accept a payment method. And it's not even just the merchants. Is okay, how do you get payment service providers? How do you get acquirers? How do you get gateways? Like there's this whole ecosystem of many companies that have all aligned around a set of standards and a set of technologies that like they work and they work very well, but it's not purely everyone is aligned on them because they are just the best technology. They've aligned on them because that's what the entire ecosystem has been using. And so I think that's one thing that's missing. I think governance and business models is another piece. Like, how do you enable business models for companies in the ecosystem, to grow and scale and succeed? And so I think about it from like a stablecoin wallet perspective. If you're a stablecoin wallet provider today and a consumer, pays directly in a stablecoin at a merchant, funds are actually leaving your platform. And today you don't make any money on that. Like that is actually net negative. Like you actually wouldn't want someone, to spend at a merchant. You have no upside there versus, the concept of interchange and the ability that if you invest in building a great product that enables a consumer, to spend at a merchant that drives a sale, that you're now incentivized, that you have a business model that you can build and monetize those transactions. Like, that's a huge deal. And so I think technology is important and it always will be, but network effects, ubiquity of acceptance, governance, economics, business models, like all of those things are just as important, if not more. And I think those things are a lot harder, to switch and get everyone over overnight. And I think that's why, I think the industry has converged, in a way that makes a lot of sense to us. Is that, how do you bring these two worlds together? And I think stablecoin-linked cards are the example of that. You have the ability to build any new type of stablecoin native neobank and wallet all over the world that takes all of these benefits of building on chain that's faster, that's more cost-effective infrastructure. But that doesn't mean that you can't use that product to spend at every merchant that accepts Visa, and not requiring every merchant and PSP and gateway and acquirer to converge on a new set of standards, figure out how to solve problems that have already been solved in fraud and chargebacks and risk, and just being able to have that work on day one. I think that's just a critical piece of the industry. So it's exciting to see. We had crypto linked cards for a while. It's kind of a novelty of spend your Bitcoin or get Bitcoin rewards. Now stablecoin linked cards are just becoming a massive category. And if you think about how fintech cards led to a whole new wave of neobanks, who have become some of the largest, fastest growing companies in the world, both on the enablement side. And if you think about companies like Marqeta and modern issuer processing, now there's a whole new generation of companies built on stablecoin linked cards, and whether it's Bridge and Rain and many of these platforms that are growing and doing phenomenally well. Every time you have a platform shift, being able to have companies build on top of you that can grow and succeed and still leverage the acceptance of the business model. I think that's one of the things that's been really exciting to see play out.
Yeah, maybe there's a lot to unpack there. I mean, maybe first off, we can talk about interchange briefly for a second as well, because I don't think this is a concept that's fully appreciated. But maybe if you don't mind, Cuy, just breaking down interchange in simple terms, but also where I guess what is the opportunity to build new networks, potentially replicating some of interchange, or how should folks in the stablecoin space think about new business models specifically here, so you can drive incentives correctly? We obviously know tokens are a big part of the crypto landscape today, but maybe there's another way of approaching it too. But curious to get your feedback on that.
Yeah, I think Interchange has been an incredible business model that has aligned incentives in the broader payments ecosystem for a long time. And the way I look at it is that at the end of the day, if you're a merchant, your goal is to sell a product, whatever you're selling. And you should want the least amount of friction possible, to enable a consumer to show up and have as low mental transaction costs, where if they see the product, they like it, they just want to buy it. Yeah. And I think the question is, okay, well, how do you incentivize a ecosystem of consumer facing products, whether it's a wallet, whether it's a bank, to create a really, really good experience that a consumer can trust, that they're willing to use at any merchant to purchase a product? And if there's no incentive for the wallet, or there's no incentive for a bank, why would they invest in creating reward programs and schemes? Why would they invest in the potential fraud, chargeback risks that can happen in a payment? And so being able to have this concept, and for everyone out there, Visa doesn't make interchange. It's not revenue that goes to Visa. It's Visa has created this mechanism by which when a consumer spends on a card, there's a cost to a merchant for acceptance, and the vast majority of that is it's going back to the issuer. And so it becomes a business model that when consumers spend, the issuer can actually monetize that. And then many times a lot of the interchange actually goes back to the end consumer in rewards. And so I think that you have to think about all the elements of how do you create value in a transaction, and value on both sides, rather than just the cost of acceptance. And so anytime someone says, oh, well, stablecoins are cheaper and so they're going to win, sure, a merchant can choose to accept the stablecoin, but there are a lot of things that they have to think about of, okay, well, which stablecoin, which blockchain, what happens if the blockchain goes down? How do I manage refunds and, chargebacks? What if it's fraud? Has the end consumer been KYC'd? How do I convert that stablecoin, into fiat where like I want to operate in fiat? How do I create a great consumer experience that just works, that someone doesn't have to go through like a complicated, set of actions? So there are still challenges on the merchant side. And then there's, for a consumer, what incentive do I have? Like, why would I switch from where I pay today? And like, I think Visa, we know better than anyone how hard it is to change consumer behavior. And even just going from like dip to tap, which has like come a long way. I mean, Raj, when you were at Visa, it was like still in the US, like we were behind on tap. The rest of the world was tapping to pay, and we were still like concerted. Like, to think about going from dip to tap versus going from tap to connect your wallet, click 3 buttons, like pay gas, like it's fundamentally like a longer experience, at the point of sale. It's a scarier experience as a consumer. I still get nervous, when I, connect my wallet and I'm like, okay, am I going to sign a transaction here? Like, is this actually the merchant? Are they going to drain my NFTs? So there are all these things that the payments ecosystem is complex. You have to have value on both the consumer side, and on the merchant side. You have to have a business model, to incentivize people to develop, great products and manage, some of the risks. So, to your question, like, can you build an interchange, equivalent, on crypto rails? Like, maybe. I don't think we've like seen, anything there yet. I think that there'll be, a number of attempts, to do that. But when you have an ecosystem that works really well, you kind of have to ask, like, what problem are you solving? And in consumer to merchant payments in developed markets like the US, like Apple Pay works really, really well. And so how are you going to convince a consumer to switch from using Apple Pay? That's kind of like the first question that you have to ask. I think it's a little bit different if you talk about emerging markets. If you talk about places where cards don't have penetration, like then you could argue like maybe there are more opportunities there. But I look at it as like that's an opportunity for us to put a card in every stablecoin wallet, and so like we're going to try and participate in those flows as well. And it's such a complex ecosystem. It's hard to change consumer behavior. All these things take a really long time, and it's a lot more than just technology and white papers. And like I think that's the reality for most people in crypto.
Yeah, that's the mic drop moment. It's a lot more than technology, white papers. Faster, cheaper, even the various features that the new payment chains are implementing. I think they're all necessary, but not sufficient. Yes, you need guaranteed kind of channels and capacity, guaranteed low fees, deterministic finality, but then you still need the network and incentives. And so I think people either don't know or underestimate the power of interchange or some other mechanism to in aggregate, define or drive user behavior in this multiplayer payment network world. And so I kind of always have to squint my eyes a bit and when people talk about merchant acceptance as the stablecoin use case of choice, or the one that is going to be, it's the one that ends up getting a lot of attention. But I think we can use this as a segue to kind of discuss what are the stablecoin use cases that you're seeing as real, you're seeing as having the most traction. I think you mentioned emerging markets and cross-border payments, but there's a long list of use cases that are talked about, but there's a shorter list of use cases where there's real traction. And given your vantage point at Visa, I think you guys have a very good perspective of where the volume actually is, in what use cases. Is it high risk? Is it emerging markets? Is it regulatory arbitrage? Is it getting around capital controls? Where is the real traction coming from? Maybe we can go through use case by use case.
Yeah, I think after crypto trading and capital markets, to us, it's pretty clear that the number one use case today is dollar access. And that is a real use case. Like a dollar store of value is an incredible product in many parts of the world. And so I think we've seen that has driven like a reason for people to adopt more than anything else, including payments, and particularly on the consumer side, just being able to store value in dollars for the first time in a lower cost, more accessible way, and to have a ton of competition of different end products that can enable dollar access. And I think that it's a really interesting thing to think about from like a developer, like a fintech developer standpoint. And so we've always talked about like if you wanted to build a product that looks and feels like Venmo, that can do a dollar balance plus P2P payments, what would that have looked like to build 10 years ago, 5 years ago, today? What will it look like 5 years from now? And I think that the barrier to entry is just getting lower and lower. The cost of being able to create a self-custodial wallet, like using wallet as a service infrastructure that you can bed into an app with great on and off ramps on a fast chain where you can sponsor like that experience is becoming more accessible, both for like brand new fintechs that are looking to offer like the dollar apps of the world, which I think those have been phenomenal success stories, and very large traditional fintechs or remittance companies and global big techs who might have had products that have been very successful in one market, now being able to use that to scale globally and to just offer a global dollar account. Like, I think that is a killer 10x product that is better than what exists in most markets across the world. If you want to hold $1,000, what's the fastest, cheapest, easiest way to do that? And I would argue it's through a stablecoin wallet. And you're going to have many different options of which stablecoin wallet and like who offers it to you. But I think that is very clearly has product market fit. And I think that is going to grow significantly. I know Tether, they say they've got about 500 million end customers who are holding USDT balances. So if you say give or take, there's somewhere between 500 and maybe 600 million customers. I would be surprised if that's not over 1 billion customers in the next 2 to 3 years now have access to dollars someplace in the world. Now, I think that there are major geopolitical questions about that,
right?
And I don't think we've even started to see how governments and regulators respond, because I think as you get to that tipping point, and if you see the demand and growth of dollar access in these markets start to actually impact local fiat currencies, like what are regulators going to do? Are they going to try and crack down on it? Are they going to, which is kind of hard to do because it runs on decentralized rails. So how do you do you go door to door and confiscate people's private keys, or do you enable it to be integrated into the financial system and let banks offer stablecoin dollar accounts but still have capital controls and still have KYC? So there are big questions around how it plays out, but it's really hard to like put yourself in like it's 2030 and like will someone pick a market on the world that has an internet connection, probably Starlink by then, and a mobile phone be able to access and hold dollars if they'd like to? I think the answer is probably yes. And so I think like that alone is just like a major use case. And I think that one is very complementary, of our network today to say like, store of value is transforming. How can we still have new store of values fit into existing medium of exchange, in adding, stablecoin linked cards, to those balances? So I think that is, number one. Then I think a lot of the other use cases, when I think about cross-border payments, whether it's, B2C, P2P, B2B, one way that I like to think about is that there's some value in a stablecoin being used for the cross-border flow, but doing a conversion into fiat either on one side or on both sides. It's clear there's some value there. There's some growing traction. There are a bunch of innovative companies, they're building there. But I think it's most interesting of this flywheel of as there are more consumers and businesses that are holding stablecoin balances, then I think P2P, B2C, B2B, if it can be entirely on chain where it's one stablecoin wallet to another, that's going to be much bigger and more powerful. And I think that that's still several years away. Like I think most of the stablecoin to stablecoin cross-border is still very crypto native of, someone who has a Binance account, sending funds to someone who has like another exchange account. But I think we'll get to a point where there is a very large market of cross-border flows that as store of value becomes more ingrained, then you'll see P2P between all those wallets that are interoperable you'll see B2C, you'll see B2B. But I think there's an interesting business in the intermediate period of like, how can you get really good at having fiat on one side, converting, initiating stablecoin payouts? How can you receive a stablecoin and convert to fiat? 2 years ago, that was awful. Like, there's just like, it was so hard to do. You were like working through crypto exchanges. There was like no liquidity. I think it's better now. I think it will be better 2 years from now. Like, but it'll still take time for that.
Yeah.
Yeah, it's fascinating because I mean, one mental like shift that I'm trying to make for myself is like when you started the Visa crypto team, you're thinking about stablecoin circulating supply in like the hundreds of millions. I think it was creeping towards $1 billion at that point. Now we're at multiple hundreds of billions, and now you're like the way you're describing it, you almost have to reshape your thinking to think in trillions now, which is like a really hard shift for a lot of folks to make. But that's kind of the paradigm shift that's happened over the last 5 years. And to your point, if we're at a almost 300 billion in circulating supply, $1 trillion like asset class isn't too far away at this point. It's actually not unreasonable to think that way, but it's a really hard shift for like most folks to make. And I think one of the things that you touched on is we haven't even touched on like the how banks or regulators are thinking about this, but with your vantage point of being at Visa, like you talk to banks all the time, you kind of see this view, like how do you see like the broader financial institutions and in ecosystem around Visa kind of reacting to this shift? Are they like recognizing that this is kind of creeping towards $1 trillion asset class, or are they still just trying to figure out like what's how to interact with it?
Yeah, it's a great question. I think it depends on the type of bank and depends on the market that they're in. I think first, like, I love talking to banks about stablecoins. I think it's very interesting. I think you learn a ton. It kind of grounds you, in reality. I think many of them are in a challenging spot, particularly banks in the U.S. that like they haven't had the luxury of being able to spend years, in like a natural progression of how they can build and partner and like get into the space. Like they're going through like what we like to think about as like a whiplash where they kind of like many of them had teams in 2021 and then they weren't really able to do much. The regulatory environment, like you couldn't even think about interacting with a stablecoin on a public blockchain even a year and a half ago. Like you just couldn't do anything, and so they weren't spending time on it. They reallocated those resources elsewhere. And then now all of a sudden you have a bill pass. You have the first payments bill in like over a decade. It's like a really big deal. And so like you have to get into the space. And so then you're kind of scrambling around, okay, what does this mean? What do we do? I think it's weird for US banks where like it's a US dollar stablecoin. You have regulatory clarity in the US, but most of the use cases right now are outside the US. And so if you're like very domestic focused, like you feel like you kind of need to do something, but then your customers aren't really asking for it because like they don't really need stablecoins when they have dollar accounts today. So I think it's a challenging environment. We're spending a lot of time trying to help banks get up to speed. I think banks in emerging markets are seeing more of the direct competitive pressure of all of these fintechs and stablecoin neobanks are like right in their backyard, and like if they do nothing, will whether it's existing customers move over or whether it's there's a whole new generation of customers that might not have a traditional bank account in the local market. They might use some global stablecoin neobank. But the challenge for them is there isn't regulatory clarity in many emerging markets across the world, and so they're trying to figure out like there's real competition. You have this somewhat uneven playing field where there are companies in San Francisco that can roll out like a global self-custodial wallet, that's offering dollar access, but then the local bank, can't offer dollar access. And so, there's both what technology and infrastructure do they need? And we spend a lot of time with them on that of just how do you think about what a modern stablecoin stack should look like? Which blockchains, do you think about using? Do you pick one? Do you use, multiple chains? How do you think about wallets and private key management? How do you think about which stablecoin? Do you create your own stablecoin? How do you manage local fiat, liquidity conversion? So we're trying to help banks be able to understand the full stack of infrastructure that they need, and then how they can, start to get into the space, whether it's partnering with local players or kind of advocating with regulators that, like, if I think Chris Brummer says this really well, the United States is like updating the plumbing behind our financial and payment system, like the lowest layer of plumbing. Like that's what like stable coins are. And if you're outside outside the US, the rest of the world, you have to be compatible with dollars today. Every economy still has financial institutions that interact with dollars. Do you want to be compatible with this upgraded form of plumbing that the US is now doing? And I think that there's an opportunity if you can enable your financial system to be better plugged into that plumbing, having faster, easier access to dollars, easier access to capital markets, or if you're disconnected from that plumbing, you might fall further behind. So I think it takes like banks and regulators in these markets to recognize that this isn't going to go away, to give the flexibility for stablecoins to come into the regulated financial system, to have banks have partners like Visa that can help give them the right infrastructure, and then have them have the opportunity to compete, because consumers are voting with their wallets. And they're going towards this new class of neobanks and wallets and fintechs that are emerging all over the world. And so we think it's important to have a competitive ecosystem where it's not just self-custodial crypto companies that are able to offer stablecoin products. It should be local banks that can offer stablecoin products. And so we'd like to see that world. And I think that we'll get there. It just takes 1, 2, 3 years. It's not something that happens overnight. And the Genius Act was passed 3 months ago, 4 months ago. Like even 6 months ago, like it was a question of like, are we going to get like actual legislation here? And so the rules haven't even been written like for what the Genius Act is how this is going to be interpreted. And so I think that has to go into place, and then other regulators have to. So it'll take years. But I think in 2030, most financial institutions should have some integration into this new form of plumbing, and like what that looks like, how much they build, how much they partner, like we'll see. But on a 5-year basis, I think you kind of have to.
Yeah, and does that mean that there's a dependency on the kind of regulatory progress in each of these markets? And we mentioned dollar access as being a key use case, cross-border being another use case that's growing. But it feels like banks or regulated financial institutions are almost hamstrung in the same way that the US banks were, because they're reliant on the pace of progress of local market regulation. Meanwhile, the fintechs can continue to evolve and adapt. And so with that in mind, who do you think is best positioned to take advantage of these new financial rails?
Yeah, I think that's the challenge. And I think what we're seeing just empirically is fintechs are growing rapidly and building really big global businesses. And they're not waiting for the regulatory environment to be clarified in every market. Many of them are just rolling out self-custodial wallets and saying, hey, like the consumers managing the keys. And then it's interesting to see the market of like local crypto exchanges that are now becoming these FX platforms, where it used to be selling Bitcoin for local currency, and now it's just doing FX between a local currency and a stablecoin. So I think that those players are going to get bigger and bigger, and then we'll see do some of them become regulated as financial institutions in these markets and overseen by the central banks, or do they end up merging with, or do this competition between, can banks be able to get the crypto infrastructure that they need, or do the crypto players end up being able to get into the regulated financial institutions and be able to operate like banks? So I think we'll see some of both, but I think that it is this really interesting environment where banks, every year that goes by that you give fintech a head start, it's going to be harder for banks to catch up. And I also think about this to some extent with like local currency stablecoins, that if I was a central bank or a regulator, I think that's one of the top priorities that you should focus on in your market. If you believe that this is a new format of money, this is new plumbing of financial rails, then there's a question like, do you want your currency to be represented in that plumbing? And now I think that the use cases will be very different. I don't think you'll have people outside of a country just randomly holding local currency stablecoin, but for the customers in your country, do you want them to even have the option to hold your local currency? and then you want to have more efficient, better functioning FX markets, in your local currency with more transparency, between the local currency and an existing stablecoin. So I think that I hope that over time, banks, along with their regulators in many markets, will be pushing to say, let's adopt this infrastructure, let's participate in the space, rather than enable this class of fintechs to become these global players, where all of the value that they're creating is actually going to someone in San Francisco and is not necessarily going to a company in the local economy.
That's right. The non-custodial aspect of the technology means that it's even more of a competitive threat of non-local, or call it global fintechs, entering the market and starting to offer very strong services to your users. And so it's an interesting, I guess, almost counterintuitive point where it's actually in the best interests of the regulated financial institutions to push their regulators for clarity and regulation, so that they can start interacting and start maintaining share and innovating in this market. So we just had a great conversation about various different use cases today, global dollar access and cross-border payments, and how we're still in this very early phase, despite all the headlines. We're in this early phase of this quite kind of pre-regulatory clarity on a global level, let alone global regulatory unification, where all the regulators are kind of align with each other. So several years away. But in terms of the use cases that we discussed, cross-border and global dollar access, I think one common refrain that I hear, which I find sometimes a bit funny, is, okay, I get stablecoins now, but what other use cases are there outside of remittance or outside of cross-border? Notwithstanding that cross-border payments is like a huge, $200 trillion of value market a year, that's often the question. It's like, okay, what's next after cross-border? And Visa and yourselves recently put out a paper on on-chain lending. And at the beginning of this conversation, you talked about capital markets. Maybe we could talk a bit more about credit and lending and those other aspects that aren't necessarily cross-border related.
I am fascinated by on-chain credit, on-chain lending, and first, for the crypto folks, like everyone's been saying DeFi. DeFi is a commonly accepted term, and everyone understands what that is. I think DeFi is a terrible term, and when you talk to any financial institution or regulator, like decentralized finance does not resonate. And so please join us in the rebrand of like putting a suit on DeFi and turning it into on-chain credit and on-chain lending. So we're trying to fight that.
And it's also kind of got defiance in the name as well. It's like DeFi. Like, wait a second.
It doesn't work. Believe me, I've tried. It doesn't work. It doesn't work. So like DeFi is not the term for the next wave of this. I think if you just look at stablecoins from first principles, like what are the interesting properties that they have? And I think one is the ability to be transferred 24/7 globally. And I think that's the one that most people now understand, and that's what's driving a lot of the interest in cross-border. And I think that that's a very valuable, important property, and that's unique from most payment systems that exist, of like being able to actually transfer the value 24/7 globally. But that's not the only property that they have. I think the second property of the ability to use them in smart contracts and program different conditions by which when they are sent. That to me is such a big deal that we've like barely scratched the surface on all the implications and applications of what can you do with that. And so I like to think about like the very simple way to look at a smart contract is just it's a conditional payment. And we've had conditional payments forever. You have a recurring subscription. It's every 30 days it automatically is charged, but it's been relatively simple logic. Being able to write software with any arbitrary condition that then triggers a payment is a really, really, really big deal. And then you say, okay, well, like what are the examples? Like what are the very tangible ways of like what is the use case for programmable money in smart contracts? And I think what we've seen is like what's being proven out is lending and being able to represent a loan agreement, and specifically today an asset-backed lending agreement. And that's what DeFi has done. And so the genesis of this paper was I was asking the team just this, what I thought was a simple question. I was like, how many loans have been denominated in stablecoins and dispersed through smart contracts on chain. Just like what's like how big is this? Turns out that's actually a pretty hard question. And so shout out to Allium and Fred, like we were working multiple data providers and Noah from my team was spending like a month on this. And then you're like, okay, well, there are a bunch of blockchains, there are a bunch of DeFi protocols on these blockchains, and you have to like parse the smart contracts, and there are a bunch of different stable coins, and like how do you actually like figure out what that number is? And we finally got there, and the number is $670 billion. And we're like, whoa, like there's been like $670 billion of loans dispersed in stablecoins through smart contracts, on chain in real time. Like that is a pretty important proof of concept that this stuff works. Now, then you can look at it and say, all right, well, it's mostly crypto assets as collateral, and then it's being used for speculation. Like there are plenty of like caveats to it, but the point is the tech works. And so I think that there's one world where like one of the areas I have more and more conviction is I think that asset-backed lending is going to be an enormous market. And I think it's going to be much bigger than most people realize. I think it's a product that has existed forever, both for consumers and institutions, but it has had a number of costs and barriers and challenges to be able to have anyone be able to get a loan against whatever asset that they have. And I think DeFi has demonstrated that it's pretty easy in a smart contract to deposit collateral and be able to get a loan against it. And so I think as crypto asset markets grow, like I think you'll see more Bitcoin and crypto-backed lending. I think there's potential for things like tokenized gold backed lending. I think you'll see tokenized equity backed lending. I think you'll see tokenized receivable backed lending. I think you'll see all these other types of assets that get tokenized that can then work within smart contracts that stablecoins become the mechanism by which those loans are dispersed. And then I think you could see some of the same protocols and infrastructure be adapted to support unsecured or uncollateralized lending. If you have systems of on-chain identity, and if you could pass credit scores through. So I think there are a lot of things that need to be built, and it's very early. But I think there's potential that we could wake up in 5 years and say, what, stablecoins actually had a bigger impact in how global credit operates than just how cross-border payments operates. And I think if you're a bank and if you're in the U.S., if the only use case is remittances, you're like, okay, well, like, yeah, it'd be nice to have a little bit better remittance product, but like that's not like the top 3 priorities of the bank. If you say that this is better, more cost-effective, programmable, automated infrastructure for lending, that's going to create these global credit markets, that's going to reshape how lending works and unbundle it from payments. You're like, whoa, like what does that mean? Like I'm in the business of lending. Right. I should probably figure that out. And so I think that resonates a lot in terms of the potential promise of smart contracts and stablecoins being dispersed. And I think that there are a lot of barriers and challenges and things that need to be addressed. I don't think you're going to have entirely permissionless lending pools. Like if you don't know who's you're lending or borrowing from, that's not going to work. I don't think that it's acceptable to have a smart contract hack and all the money is gone. Just like, those things aren't going to work. But I'm always really interested in seeing like what can we learn from the crypto ecosystem and have the crypto ecosystem kind of prove out what the technology can do, and then how can that be adapted, to use cases that can actually be compatible with banks and fintechs and the broader payments ecosystem. And so we're really excited to figure out like how can Visa help accelerate this space. How can we provide on and off ramps? If you think about if you get a loan dispersed in a stablecoin, how useful is that if you can't spend it? And so being able to have that as a credit line on a card that you can go and spend, I think that adds significant utility. And then I think like if we want to grow credit card products, and I think credit cards are an amazing payments and financial product that haven't been able to be issued in many parts of the world because you haven't had access to credit scoring, and you haven't had capital to lend there. Like I want to figure out how can we use the capabilities of smart contracts and stablecoins to really create better credit infrastructure that can lead to more payment products spending on credit out there. So I think it's one of the most fascinating and interesting spaces that is not as well understood, and there's not as much attention on it as there should be, versus I think the cross-border stuff is fairly obvious and like, is important, but it's not the only way that stablecoins will matter.
Yeah, and it's really interesting because I always joke with people, but the DeFi has actually been battle tested. It's not like this new immature technology, and obviously like you still see some things happen where it's hacks or exploits or whatever that might take place, but you see some of the blue chip apps that we have in the ecosystem like an Aave or Morpho. These have been battle tested for many years now. And so to your point around the number of like 670 billion in loans, like to us in crypto, that's like, wow, like it's really big. But I think it's also just like a message of like how much I think battle scars that the entire ecosystem has. And I guess I guess one question for you, Cuy, just to build on this a little bit more, but like I mentioned earlier, like we as an ecosystem need to shift into like thinking in trillions in terms of I think scale and volume and growth. Like you touched on a few different parts, briefly, but maybe you can expand on that a bit more of what's missing for DeFi or on-chain credit or on-chain lending, if we want to rebrand this right now, to becoming like a multi-trillion-dollar asset class.
The starting point that's probably the biggest area is like, how do you add trust and permissioning on top of it? And I think crypto folks are very comfortable with going and depositing into a protocol and like not knowing who's there. If you talk to any bank or financial institution, I just don't think that structure is going to work. So I think that's a big open area. We're seeing a lot of innovation around different RWA focused lending protocols. So it's kind of like, I think about this in layers of there's a blockchain at the base layer. There is a protocol that can enable different types of lending contracts, which today is very permissionless. I think you're going to need new layers built on top of that can add permissioning, that could add more ability to customize the different types of lending markets that financial institutions want to participate in. And then I think there's just like a huge lack of understanding of how do smart contracts work, what are the risks, what can go wrong, and how do you manage that? If you think about, okay, well, what happens if a blockchain goes down or is overwhelmed and gas fees spike, and then the price of collateral goes down and you can't liquidate that collateral? Like, what do you do there? What happens? What are you going to use for the oracle? And like, how do you get comfortable that the price of what that asset is supposed to be is there? Like, how do you deal with if there is a hack, being able to freeze the funds or managing that? So I think it's going to take years to figure out how to adapt these things. But I think that the upside is enormous. And I love this idea of like, people talk a lot about cross-border payments. They don't talk a lot about cross-border lending. I think cross-border lending is more complicated. You have local regulations around lending has very much been a kind of domestic market and use case. But if you just look at like what's happening in DeFi, you have an investor, whether it's retail or institutional, depositing into a protocol in the US that might be technically lending to someone who's in Brazil. And because the fact that you can disperse a loan in real time, I think you can have this like global credit network and global ecosystem of lending that can exist, that if you had to send a wire transfer and it took 4 days for the funds to get there, you couldn't really do this like just in time cross-border lending. So I'm really excited to just figure out like, what is this going to look like? What role can we play to help accelerate it? And it's kind of like just the nature of stablecoins. And when I think about in the Visa context, they're just these like general purpose instruments that can be used for so many different things. And my favorite D Hawk quote that I say to the team all the time is like, D Hawk always said, Visa's total addressable market, it's not credit cards, it's all value exchange on Earth. So I think he was a little limiting. I don't know why we can't do value exchange in other planets as well in the future on some time frame. But it's like, what are all the types of digital electronic value exchange that's going to happen? And it's not just consumer to merchant. It's not just B2B. It's a complicated loan agreement that's executing on chain where a stablecoin is dispersed based upon a tokenized receivable when like certain functions are met. Like, that's value exchange. And I think that the velocity of money is going to increase. the types of value exchange are become way more diverse, but they're going to need trust. They're going to need on and off ramps. They're going to need control. They're going to need these things, to go from just like the crypto ecosystem into mainstream payments. And so I think there's just a massive opportunity for us to figure out how to accelerate that.
You mentioned a range of different things that are all the kind of necessary ingredients there. Kind of liquid on-off ramps globally, so that if there's a global protocol, global lending protocol that works on some USD-based stablecoin, you can always get in and out of it in an easy way. Then shared understanding of kind of the rules of the road, if maybe that be governance, or maybe that is just a shared understanding of a battle tested smart contracts for how it works in the liquidation process and the waterfall. There's all these different sets of things that you can conceive as that they will happen, but over some period of time. And so this feels like a next 3 to 5, maybe 10, journey towards 10-year thing. But with that in mind, we are talking about trillions, and this is to the this is where it becomes very important for folks who are in that market, banks, private credit institutions, to be thinking ahead so that they can keep an eye on it, but not necessarily that like this is going to happen overnight. So they need to kind of both keep one foot in the door, but just be building, preparing, and investing for the future. I guess
for sure. I think you have to take it one step at a time. It's like step one, how can you come on chain for the first time and send and receive value? And that's something all the way back when Raj and I, we're starting this at Visa. Like the analogy I use all the time is, if at some point, and I have no idea when, but like I wish I could figure it out, Visa decided to get a corporate internet connection and to give employees email. Because we actually existed as a company before email and before which is an amazing thing about just the heritage. But I would argue that the earlier that any company decided, let's try this internet thing out. Let's get the connection set up. Let's give people emails. You start to understand what the internet's going to look like and what it's going to be, and how do you adapt, your products and build, for where the world is going. And Visa, was incredibly successful before the internet. And the internet, we played a major role in unlocking e-commerce and building massive businesses and growth in the volume of what's happening today. And so I look at stablecoins and blockchains a similar way. Instead of going online, it's like going on chain. Like, how do you get your first corporate blockchain connection? How do you get your first wallet? How do you send the first funds on chain, receive the first funds on chain? And the earlier that you do that, no matter how small it is, the better you understand what it takes to interact with that ecosystem and how it works, and the better position that you're going to be for the future. And so like, you're not going to go straight from I've never set up a wallet to now I'm like, interacting with a lending protocol. Like, it's just like, you're going to like, can I set up a wallet and can I send value from A to B? And can I do that securely? And can I do that, in a way that actually fits with my business processes, my risk tolerance, like, my accounting and reconciliation? Like, so I think you just have to start with what is the easiest, lowest hanging way that you can go on chain, just for the purpose of being able to understand what it means to interact with the blockchain. And then you could start building these layers on top of, once you're on chain, then what can you do on chain? Once you have that internet connection and you have emails, then maybe you set up a website. You have a corporate website. Once you have a website, then maybe you have an application and a web app where you could do things with it. Then you start building products for other people who are building websites. And so I think it's the same thing. And I think there's going to be this progression over time where you go from like the entire business and everything you've ever done is off chain to you come on chain from like a payment standpoint. Then you come on chain from like an application standpoint. And then I think at some point in the future, you actually start generating revenue on chain. And I think you're going to have entirely new businesses. And this idea of on-chain revenue is just like this fascinating concept of like, earning revenue per block. Like, how cool is that? Like, how can you build a product that actually taps into a global ecosystem that you can distribute to anyone who has a wallet, where every time a block happens, like, you're getting revenue? So I think that's going to be the journey that a lot of companies have to go on, and that's a decade plus journey. But I think it's just taking it one step at a time.
Yeah, some of my favorite moments when I was building Portal 2 is that when I saw a developer, like a fintech developer, actually spin up a wallet and then actually conduct that transaction in USDC, you can kind of see like their face light up to be like, oh, I actually get this. This is like how money is being moved on these new rails. when they've historically interacted with like, banking as a service products or something else as well. So to your point, Kai, it just takes that simple step of like, how can you get on chain quickly, and then use it as like the beginning of like a wider rabbit hole. One maybe like one last use case that is starting to pop up a little bit more now. We're starting to see an uptick in X402, which is a new agentic commerce, or a new payment protocol that's being built on the internet. I think of agents as like a larger expansion of the human population that's now happening, and they're likely going to be large transactors in this new economy. But we're obviously early days right now. But maybe you can just describe, like, from your vantage point, like, how do you think about interacting with agentic commerce or agentic payments from a Visa lens, and what is there any interest or demand or that you're seeing that is I think worth experimenting with?
I think it's a fascinating space. It's one of the most intellectually interesting things that's happening. I don't understand it nearly well enough. I don't think many people understand it at all. And so that's what makes it fun. The general framework is that I think that there's going to be an ecosystem of agentic commerce, and there are kind of two different routes that it could take. One is a consumer has an agent that's helping them shop at merchants, whether it's booking travel or buying things for your kid's birthday party. Like, it could be anything. And I think there, Visa's incredibly well positioned. We've been early leaning in. We've got an amazing team focused on agentic commerce that is basically adapting our network and our capabilities to be able to serve those flows, to enable a consumer to put a card on file, tokenize that card, give intent and delegate access for an agent to be able to purchase something on their behalf, and having that just work with a merchant. So I think that is a huge opportunity from a kind of future next gen Visa card perspective. And if you want your agent to be able to buy from anywhere on the internet, the best way to do that is over Visa. Then I think there's going to be a second set of use cases that I put more in like the agent to agent space, which is much harder to reason about like what that's going to look like. And I think that's where there are like a bunch of early crypto native experiments that I put like X402 in, and I could see a role for stablecoins to play, particularly around things like microtransactions. So like, I'm really interested in this like agent to agent economy, where like if you have a world that if you give an agent a task to do, it might not be able to have all the tools and skills and the ability to do that task itself. It might need help, and you could have a whole ecosystem and marketplace of other agents that are specifically optimized around that task. Whether they're providing a certain set of data, or they could actually just do the task on behalf of the agent that you're interacting with. And if you think about, okay, well, what has to happen for an agent to pay a fraction of a penny to get like the best up to date weather data, or to get a certain tool that helps solve a problem in a coding environment. And so I think that MCP servers help solve how agents can interact with other tools, but then traditionally, okay, you'd have to go and sign up separately with the provider of that. You have to get an API key. You have to put a payment method on file. Being able to just pay as you go, consuming some tool or resource, I think is a really interesting potential use case. It hasn't really happened to any degree yet. I do like I follow the X402 scan dashboard on like a daily basis, and I'm always fascinated like who's in the leaderboard, and just seeing. One, it's mostly meme coins right now, that like crypto, people minting meme coins via X402. But I think we've seen with Solana, we've seen with Phantom, like meme coins are like viral marketing. They drive attention and developer interest, and they make money for infrastructure providers who then ultimately attract some real use cases. And so I think like my mindset is approaching this like I have everything else, and just trying to embed myself in the ecosystem, talk to the builders, use the products, and just try and figure out how it's going to work. And I think this is a long way away, but I think it's a huge opportunity. And I think again, you're going to need trust. Like how do you know if, who the agent is that you're selling to, and like, do you actually, want to sell this data, to them? How do you make the on and off ramps, much easier? Like, what is the wallet experience? Are we going to have, large agentic platforms embed wallets in? Are they going to let you connect your own wallet? Like, I think there are so many open questions. But it is fascinating, and like, I think you just have to participate. You have to lean in and use the stuff and follow the data. And it is cool that like all the data is on chain, that you can see what's happening instead of having to guess it. So I think it's exciting area to watch.
Yeah, I'm excited to see what happens. It's I think a good example of building a core capability, a primitive, and then seeing who can invent a use case or who can find or discover a use case. And it may not happen for some time, or it may require some other key primitives to exist. Kind of think about Uber, which was a combination of mobile apps, kind of gig economy, good enough GPS, and then being able to pay and add through the App Store. And so, all those things kind of happen in their own different phase on their own S-curve. But at some point, all those tools are available for a developer to say, you know what, wait, we can actually do this now. Even though people thought it was a bad idea, and then it took off. And so I'm still, curious about what the use cases will be that take off. I fundamentally see that there is a machine to machine payment use case here. A agentic, marketplace where they can go and utilize each other's services in a way that is completely devoid of human interaction. Sounds very futuristic, but I can see it happening. And then I think this didn't kind of make it into the discussion of use cases, but micropayments has always been this thing that stablecoins unlock that traditional, RTP or ACH or other use cases, other payment rails don't. And so micropayments plus machine to machine sounds like the right mix of constraints and requirements for something like X402 to take off. But it's still not there yet. But I guess we are early. It's only been maybe 5 months since they launched. And so the fact that the speculation is the use case at first is probably correct on the historical trend. And it's only going to be a couple more months or quarters before something else takes off.
That's the story of stablecoins. Speculation was the initial use case in crypto trading. And like, we were always trying to make the case that it's going to cross the chasm someday. Someday you're not just going to use stablecoins inside a crypto exchange to be able to buy another crypto asset. And I think that's happened. And so I think that, we could definitely see that, more often. And like, we want to participate in that ecosystem.
That's awesome. So we're just about at time here. This has been awesome. And I'm inspired now to go build something silly on X402 just to kind of like try it out, get understanding of how it works, and then see where we can go from there. But as we round out the show, we have a couple of quick fire questions for you. So the first one, if we project out 5 years from now, what does success look like for crypto and stablecoins at Visa?
It's a great question. I think the most obvious is like stablecoin-linked cards will be a massive category, for us. I think that there is a huge opportunity to have a whole new generation of fintechs that are born Visa, built on top of our rails, and like enabling great products to consumers in many markets that like we haven't necessarily had, card, penetration in. So I think that that's one. Two, I think that we can move, tens of billions, hundreds of billions of dollars, on chain in stablecoins, underneath, VisaNet, and like, through stablecoin settlement. I think we've said publicly, we're on a $2.5 billion run rate. And so like if you could move $1 billion on chain in settlement, you can move 10 billion on chain. If you can move 10 billion, you can move more. So I think that there's a world where like the back end of VisaNet, could, benefit and modernize significantly, using stablecoins and stablecoin settlement, as a big part of it. And then I think that there's, a big business on money movement in terms of cross-border, B2B, B2C, both in Visa Direct and new products that leverage stablecoins. And I think there's a huge business around enabling banks with infrastructure, to be able to participate and bring to market consumer and merchant-facing products that use stablecoins. So I think there are kind of those four different categories that each in themselves you could think about as a long-term business that we can scale. And so I think in 5 years, like would expect that all of those become very meaningful.
That's awesome. And I guess in 10 years, there'll be crypto acceptance or stablecoin acceptance on Mars to really go one step further than D-Hawk's statement.
Interplanetary payment systems.
That's right.
It's funny. I had a great conversation with a friend of mine about this. Actually, let's say 10 years from now, 20 years from now, we're on Mars. What currency will they use? Right? And you say, okay, well, internet based, so probably crypto will be one way because there'll be something like interplanetary internet. So then you've got stable coins. But at some point, if they want to manage their own monetary policy and credit and expansion, do they create their own Martian dollar? Or do they stick with Bitcoin? Is it the fiat? Anyway, that's for another episode. That'll be an interesting one to tap into. But
the space episode.
It is. It's,
that is a great question. Like it depends. Whoever's in the position of getting to Mars is going to have a significant impact in what the medium of exchange in the Martian economy will be. So we'll have to unpack that.
Trillions, more than trillions, I suppose, by that point. So, okay, a bit of a segue there. But as we're thinking about fiction, or hopefully nonfiction, what is a favorite book, movie, or TV show, or the content that you'd recommend?
So I think the D-Hawk book, One for Many, was kind of one of the most influential in my career. It's not easy to read. It's definitely it takes some time. I also recommend the podcast that he did on the Innovation Show. There's a 7-part podcast series. If you search D-Hawk Innovation Show or put it in the show notes, like that is a condensed version of the book. I think he recorded it when he was about 90 years old. So I recommend listening on like 1.5 or 2x, but it tells, the story of Visa, his life, as well as like his life after Visa, which I think is equally fascinating, in, some of his ideas and things that he worked on. So anyone who's working in stablecoins, crypto, AI, like should be familiar with D-Hawk and his ideas.
Awesome. That's a great recommendation. We'll add that to the show notes. And then finally, who else in the space do you admire that we should bring on the show?
That's hard. There's so many people. I don't want to I don't want to pick. You guys have had a great roster of guests so far, and I think it's the perspective of people that are actually building in the day to day. I think is really important and valuable. One of the things we've been trying to do with Tokenize is like, who are the digital asset leaders that are inside of banks? And like, what's their perspective? What are the real issues that they're having as they're trying to implement this stuff? And I think that's always valuable. Now the trade-off is like a lot of banks, the comms policy, it's much harder for them to just have open discussions. But there are some really talented people who are working hard inside large institutions to try and figure out how to push them forward. So maybe I'll give you a few recommendations offline and see if they can get their comms team to let them come on the show.
Yeah, I think you mentioned it. You nailed it at the beginning. I think there's a very limited number of people globally who understand the intersection of crypto, stablecoins, payments, and banking. And so we'll find them, we'll get them on the show, and we'll get their insights so that the rest of us can be building effectively in the space. So that's great. That's a wrap. Thank you for a great conversation. And just as we close up here, where can listeners go online to learn more about you, Cuy, and Visa?
On X at Cuy Sheffield and visa.com/crypto.
Awesome. Raj?
You can find me on X at rparekh and mana.xyz.
Awesome. And for myself, it's stablecoinblueprint.com, LinkedIn at Chuk Okpalugo, and X Chuk_XYZ. Thank you for listening, and thank you for joining us today, Cuy.
Thanks, Cuy.
This is fun. Thanks for having me.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.